how to borrow money from your home equity. You know, a lot of people have equity, but they don't know how to get it. So let's talk about how to do that right here, right now. You know, if you got money and equity in your home, it's just sitting there and you want to use it, a lot of people don't even know how to get it, right? So the first way to get it, and I'm going to talk about how to get it, probably what you should do with it, and how to pay it back, and some of the tax benefits. So join me on all 4 of those and stay to the end of the video where I talk about all that stuff. By the way, don't forget to subscribe and like the video if you think it's good. So here we go. So number 1, if you have home equity in your home, how do you know? One of the fastest ways to find out if you have home equity in your home today is to just go online and look at Zillow, Realtor.com, or talk to a local agent and get an evaluation of your home. You can get one in seconds on the internet. It may be off a lot or a little, but generally it's in the ballpark. So get that and you'll find out what your home's worth. Compare that to how much you owe, and that would be your equity, okay? So a home equity line of credit is a loan that banks like to make. The interest rate's usually a little higher than the first loan, and it is a loan that is allowable up to $100,000 to write off in terms of your taxes. So the interest on that home loan may be deductible. I'm not an accountant, but talk to your accountant and find out if it's deductible for you. Because if it is deductible for you, then guess what? You may have a less cost after tax for that money. So if you pay, say, 6% on a home equity line of credit, your after tax may be 4%, okay? So not as painful in terms of cost. Now, how do you know if you can qualify for a home equity line of credit? I like credit unions because credit unions like to do home equity lines of credit, and their rates are pretty comparable and pretty competitive. So the first place I would go is to a local credit union. And if that isn't available to you, then obviously whoever has your first mortgage may be able to do a line of credit. Or sometimes your first mortgage will lend you more money and not have to refinance the property, which can save you a lot in closing costs. So in terms of where to get the money, credit unions or your current lender or some other lenders may have opportunities where they're trying to put money out in the market and they're going to give you lines of credit or home equity line of credit on your house. Now there's 2 types. One is where they give you all the money at once, which is almost like a second deed of trust. Another is where they just give you a line of credit and you draw off the line. That's the most common. So you have a $100,000 line of credit, you use it as you need it. Maybe you take $20,000 to do this or $40,000 to do that. So you owe $60,000, you pay it down to $30,000, you can use it again. I recommend that when you get a home equity line of credit, you get a longer term, at least 5 years or longer, because the market may move. You want to make sure you have enough equity if you need to refinance it to pay it back. 10 years is better, 15 years is better. Okay, so make sure you get a good term. Cost-wise, home equity lines of credit are relatively inexpensive. You're going to have some title costs and you're going to have some minor expenses, much less than, say, a big mortgage. So in terms of the mechanics of getting a home equity line of credit, let's talk about the simplest way, which is to go online. How do I get a home equity line of credit? And it'll give you all the different sites that you can use, and you can actually apply online. NerdWallet is one of them. Another one, usbank.com. Many of the credit unions have online opportunities. Rocket Mortgage has them. So you can go to these different websites and apply. Now be careful. Don't apply for a bunch of websites at the same time because it can crush your credit score, okay? So look and review what their costs and their rates are and apply for 1 or 2. Sometimes you could do it all online and not even have to have an appraiser come to your house because they use area appraisers in terms of market value by websites and other things that give the bank a value about what your home's worth by comparable sales in the area of a similar home. Okay, so that's one way to do it. Another way is just go into the bank and bring with them, of course, your ability to repay, which would be your W-2 or your income, bank statements, tax returns. Okay, usually they want to see 2 or 3 months of bank statements, your tax returns, and as well your credit and your ability to repay. Because at the end of the day, it's a debt, right? So you need to be able to repay it. So they're going to qualify you, and you may have more equity than they allow you to borrow because you don't have the ability to repay, or they may allow you to borrow a lot of your equity. Typically, they like to not go to 100%. They usually go under that, 75, 85, 95, depends on your credit, your ability to repay, how much equity you have, where your property is, all these other factors. So when you go to get money on your home equity line of credit, remember, it is a loan. You do have to pay it back, okay? Now, what are you going to use the money for? I'm going to talk to you about that here in a minute, but don't forget to subscribe, like, comment if you like this video. I'm here to help you learn to earn, to help you make money. So subscribe so I can help you do that. So what are you going to use the money for, okay? My suggestion is that if you take money off a home equity line of credit, you do not use it for consumer debt. Do not buy cars, pay off credit cards, do stuff like that. I recommend that you take money out of your property, you buy more property. Real estate for real estate, okay? If you're gonna borrow money out of your real estate, you take that money and you buy real estate. Not a business, not pay off your car, not pay off your credit cards. Because what's gonna happen is you're gonna eat away at your equity in your home that you worked hard to build up. And then eventually what's going to happen? Well, you know, you're going to have to pay it back, right? Well, if you already have these debts anyway, you're going to have to pay them back. So if your car payment's too high, sell your car. Buy one for cash, okay? Use your home equity, spend $5,000 to buy a $5,000 or $6,000 car and get rid of your $30,000 car. Pay cash, okay? That's cool. But don't go out and spend $30,000, $40,000 to go out and buy a new car in your home equity, all right? If you got $30,000, $40,000 in credit card, my suggestion is you pay off the lowest balance first and then pay the next one and pay the next one. Not take money out of your home to pay off stuff you already spent too much money on anyway. Got to break those habits, all right? So that's how you get a home equity line of credit. That's what I recommend you do with it. Talk to your tax advisors, talk to your accountant, talk to your significant other if you have one, and be on the same page, okay? Don't borrow a bunch of money out of your property for stuff that is just stuff. So it's important that whenever you take money out of your property, you use it for things that are going to make you more money. That's Paul's opinion, okay? And I made a lot of money in real estate, and I borrowed money off property and leveraged up my monopoly to buy more property. But always talk to your accountant, your tax advisor, and do what's right for you. Join me on the next video after you subscribe. I'm going to talk to you about how to increase your wealth and how wealthy people think. So join me on that one.